very hard that the people who were the most responsible and worst savers, and now in the light of this recession we've gone through, want to be the most responsible, will not be rewarded for that at all. And it's unfair. It's terrible, but it is the way it is. Doug Flynn, you've got people who come to you with these questions. They say, I don't have the appetite for more risk. What do you tell them?
Well, it's a good point. I think part of it is, in the book, we have a detailed risk profile, and I think that's something that it deserves to be looked at. I think you might have more appetite for risk than you think with goals that might be 20 or 30 years away. Goals that you might have a year or two away, you shouldn't have anything to do with the stock market. But people tend to put everything in one big bucket and expect it to be the portfolio. I'm going to get in the market, I'm going to get out of the market. If you separate into your goals, you can start thinking more like, hey, long-term goals I can be a little more aggressive with than maybe I'm comfortable with, and I'll learn to become comfortable. But short-term things, savings, and money I need tomorrow should have nothing to do with that, so I don't worry about if the market goes down 20%.
Right.
So you have to start looking at it and thinking about it that way. That's the beginning of developing a portfolio and getting comfortable with investing. Two bad things can happen to people when they start investing. You either do really, really well, or you do really, really poorly. And if you do really well, you tend to take bigger and bigger bets until the whole thing caves in. Or if you do really, really poorly, like the people who invested the last 10 years in the market, they've been burned, they haven't made anything, they might shy away from investing for the rest of their lives. That's not going to do it either.